What's going on, everyone? Today's video is going to be a quick analysis of my latest stock purchase, GoPro. I'll be sharing with you my bull thesis as well as my plan with this one going forward. I set aside time specifically to bring you guys a lot of value, so show your support by leaving a like down below and consider subscribing if you like this content. With that said, let's jump right into it. GoPro became publicly traded back in 2014 and shortly thereafter was trading between $80 and $90 a share. Over the next few years, it downtrended all the way to the low $2 range, and there were some serious concerns about this company making it. But they've really turned things around as a business, and their business model has changed. It's now trading between $9 and $10 a share, and in my opinion, there is still serious upside. Years ago, GoPro was only a camera company, but now, in addition to the cameras, they have an app as well as a subscription service. Selling hardware only is a tough gig, but once you can succeed selling software, the game has changed. The thing is, when you sell software, the marginal cost of creating one additional unit is nearly zero. It's basically a copy-paste, so your margins are very high. There are a lot of other very successful big tech companies that rely on a subscription service or selling software. When well executed, this business model is king. First, you buy the GoPro camera, and then you start using the subscription service. When the time comes to upgrade your camera, you have no choice but to choose another GoPro. Nobody understands this idea better than Apple, and those of you who have an iPhone, iPad, and Mac know exactly what I'm talking about. You're just locked into that Apple ecosystem. There are other companies who do it too, but Apple is the best. The bottom line is that subscription services and companies that sell good software offer a sticky product and they're high margin. It's estimated that 80% of GoPro's revenue from this side of the business makes its way to the bottom line. Next, GoPro's subscription service is growing rapidly. 3 quarters ago, they reported 750,000 subscribers. 2 quarters ago, just under 1 million, and last quarter, 1,160,000. At $50 a year for a subscription, this adds over $50 million in revenue, and of that, 80% is profit, so an additional $40 million to the bottom line. Now, GoPro isn't doing this quite yet because of all the promotional pricing that they've been putting on the product, but this will be a highly profitable segment of the business going forward. The company only does just over $1 billion in revenue, so an additional $40 million in income is incredible. On the GoPro website, you can see they have a simple product offering, just 3 cameras. They offer one app. It's this quick app that they launched a while back and has in-app purchases as well as a few other software offerings. Of course, like other companies, they offer many different accessories and gear that is GoPro branded. And finally, we've got the GoPro subscription, which starts at $49.99 a year. Before we even look at the financials, it's important to understand what GoPro sells. GoPro sells a fantastic product. I used it years ago when I freestyle downhill skied, and anyone in action sports knows GoPro is the only game in town. People in this space don't ask if you're getting an action camera, they ask if you're getting a GoPro, much like people ask if you have a Kleenex instead of the generic word tissue. GoPro has control over the vocabulary, which speaks volumes of their brand, so the company has a sizable moat. In my opinion, the question has never been about the product, it has been about management's execution. They've fumbled around in the past, but it finally looks like they're turning things around. Here's a quick look at some of GoPro's important numbers. They have a market cap of $1.5 billion and have revenue in the last 12 months of $1.1 billion. GoPro's price to earnings estimate for this year is 12.6, and next year's PE estimate is 11, which means that it's going to be more profitable next year. Also, its price to sales ratio is 1.33, which is about in line with the industry. Over on the growth tab, we can pretty safely ignore the revenue growth numbers for the last 3 and 5 years because this company has been down and out, but they're turning things around, and this is a turnaround play if you choose to invest in GoPro. We care way more about what's going to happen in the future than some of these past growth numbers. Finally, on the cash and debt page, we can see GoPro's current ratio is 1.6. This is the ratio of current assets to current liabilities. Anything over 1.5 is pretty solid. In fact, GoPro's balance sheet is even better. The current assets is greater than the total debt, which is pretty remarkable. Management at GoPro has had a bit of a questionable history. In 2016, GoPro was sued as a part of a class action lawsuit alleging that GoPro made false and misleading statements to investors. The founder and CEO, Nick Woodman, was also voted as one of the worst CEOs in 2016. That being said, from 2016 to 2018, the company shed unprofitable segments of the business and focused on the core business, which is what they're actually good at. It's been suspected that Nick Woodman has been distracted from actually running the business at times. Perhaps his 180-foot yacht, vacation properties, and private jet kept him unfocused. That appears to have changed now, but Nick Woodman still is running this company, so you should be aware of this. The past performance of this company is shaky at best. You have to understand this. So, when you're analyzing this company, you can't just use the past as a prediction for the future, otherwise you'd never even look into this company. You have to understand the changes to the business model and believe that the way that they're going as a company is going to allow them to become profitable, stay profitable, and keep them on a positive trajectory in the future. This is a turnaround play. I ran some of my own projections for GoPro stock over the coming years, and even using conservative numbers, I have a minimum price target of about $21.82 in 5 years, which would give a person approximately a 17 to 18% rate of return if you were to buy in at these price levels. In reality, I do think there's a strong chance that GoPro as a company will perform stronger than some of the numbers I used in my modeling, and there's a chance that if GoPro's price to earnings ratio is even higher, the stock price could perform significantly better than what I projected here. As of this recording, I own 200 shares of GoPro and plan to add a few hundred more in the next few weeks and months. My plan is to make this into a meaningful size position now, but I also want to leave a little bit of room in case the price goes down significantly from where it's at now. If you've made it this far in the video, thank you so much for watching. Don't forget to like the video, comment down below, and consider subscribing. Until that next one, peace.